Imagine spending decades building your life around one dream, a home, a place that's supposed to protect you, grow in value, and secure your future. But what if that same home quietly turned into your biggest threat? Across California, families are opening letters that feel like countdown timers: higher taxes, disappearing insurance, mortgages resetting overnight. Yet nobody's talking about the real reason this is happening. It's not bad luck, it's not bad budgeting, it's a slow, calculated shift hidden inside the system itself. And by 2026, it could force millions to sell just to survive. What's causing it? Why is it happening now? And how can something that once meant safety suddenly feel like a trap? We're diving deep into the story most people are too afraid to tell. So stay with me till the end, because what you'll hear today could change how you think about home ownership forever. And if you want to stay ahead of what's coming, quietly hit that subscribe button. It helps more than you think. Let's begin. Chapter 1. The tax trap no one saw coming. For years, California homeowners believed they were protected by rules that promised fairness, predictability, and stability. It was the law everyone trusted. Proposition 13. It was supposed to keep property taxes under control, a safety net against greedy assessments and out-of-control costs. But that safety net is starting to tear apart. Local officials have quietly found ways around it, adding new charges, adjusting valuations, and sneaking through local measures disguised as community funding. One by one, these changes barely make headlines, but together, they're rewriting the entire system. The increases are small at first, a few $100s here, a new infrastructure fee there. Yet, by 2026, many homeowners will be facing tax bills that are 2 or even 3 times higher than what they once paid. The reason? Cities are running out of money. They need cash for roads, pensions, and climate projects. And property owners have become the easiest targets. For retirees living on fixed incomes, the timing couldn't be worse. Some are paying more in property taxes now than they did for their original mortgages. Younger families aren't safe either. Many stretched to buy during the pandemic boom, and one small increase could throw their budgets off a cliff. Politicians call it modernization. Critics call it what it really is, a slow repeal of everything Proposition 13 once stood for. And while the numbers might look like just percentages on paper, the effect is deeply psychological. Owning a home used to mean freedom, security against inflation and rent hikes. Now, it feels more like a ticking meter you can't switch off. For millions of Californians, that dream of ownership is quietly transforming into a long, expensive nightmare. Because when your property tax rises faster than your income, your home stops being your shelter and becomes your burden. Chapter 2. The vanishing safety net. It isn't wildfires or earthquakes pushing California homeowners to the edge. It's the silence of an empty mailbox. For decades, insurance was the invisible promise that a disaster wouldn't destroy everything. But lately, that promise is disappearing. One by one, the biggest insurers, State Farm, Allstate, Farmers, have stopped taking on new customers, or have pulled out entirely. Their explanation: California simply costs too much to insure. Rebuilding prices are exploding, payouts keep rising, and state laws prevent them from raising rates fast enough to keep up. So instead of losing money, they walk away. For ordinary homeowners, the fallout is brutal. Premiums that once sat around $2,000 a year now climb past $6,000 or more. Some families get letters that end with one cold sentence: "We will not be renewing your policy. Without insurance, you can't refinance. Without refinancing, you can't sell." And when buyers realize they can't get coverage either, demand collapses, taking property values down with it. A home is supposed to feel safe, but now even a spark, a storm, or a single envelope can send panic through entire neighborhoods. People used to fear losing their homes to nature. Now they fear losing them to paperwork. Because once the companies leave, the safety net leaves with them. And what's left behind is a quiet, invisible disaster, one policy at a time. Chapter 3. The mortgage trap. When interest rates hit record lows in 2020, it felt like the deal of a lifetime. People rushed to buy, convinced that cheap loans meant permanent stability. But the clock on those perfect mortgages was already ticking. Many homeowners took adjustable rate loans. short-term deals with low starting payments that felt harmless at the time. Now those rates are expiring, and the reset is brutal. Payments are jumping by hundreds, sometimes thousands of dollars a month. Families who thought they'd locked in a dream are suddenly scrambling to keep up. They can't refinance, rates are too high. They can't sell, prices are sliding. They're stuck in what economists now call mortgage paralysis, trapped between debt and denial. It's not the crash of 2008 all over again. It's slower, quieter, more psychological. Instead of mass foreclosures, it's mass exhaustion. People cutting essentials, skipping repairs, working extra jobs just to stay afloat. The emotional cost is enormous. That house they once celebrated now feels like an anchor tied to their savings, their time, even their pride. And the cruel irony, the same system that encouraged them to buy is the one tightening the noose now. By 2026, millions will be forced to decide. Keep fighting to stay in a home that's bleeding them dry or walk away before it pulls them under. Chapter 4. The slow fall of home values. For years, California real estate looked untouchable. Prices climbed like clockwork, and every homeowner felt like they were holding a golden ticket. But that illusion is starting to fade, quietly but fast. In cities like San Francisco, Sacramento, and Los Angeles, home prices have already slipped by double digits since their pandemic peak. At first, no one panicked. People told themselves it was temporary, a correction. But as interest rates rose and buyers disappeared, that small dip started to look like a trend. Now, thousands of homeowners owe more than their house is worth. For anyone who bought during the frenzy of 2020 or 2021, it's a gut punch. They paid above asking, fought bidding wars, and now they're sitting on losses that could take years to recover. The problem isn't just numbers, it's confidence. When people stop believing their home will grow in value, everything changes. Repairs get delayed, maintenance stops, neighborhoods start to feel neglected. The pride that once fueled California's housing boom is quietly turning into fear. And that fear spreads fast. Investors are pulling their money to other states, Texas, Florida, Arizona, chasing higher yields and fewer rules. The cycle feeds itself. Fewer buyers means lower prices, and lower prices mean more panic. The truth is, California doesn't need a dramatic crash to collapse. A slow decline is far more dangerous. Because when people start losing faith in the value of their homes, they start losing faith in the dream itself. Chapter 5. The hidden costs. Nobody voted for. Owning a home in California has always been expensive. High taxes, high maintenance, high everything. But lately, something new has been creeping into the bills. Something quieter. Across the state, homeowners are finding extra charges buried deep inside their property statements. Community safety fee, climate impact contribution, infrastructure adjustment. They sound small, harmless, even responsible. But add them up, and they're anything but. These aren't one-time costs. They repeat every year, climbing higher each time. What started as a $200 neighborhood levy can suddenly become a $600 sustainability fee. Most people don't even notice the change until it's too late. Cities say it's necessary, that they're funding new projects, schools, and environmental goals. But behind the scenes, it's really about one thing: money. Years of debt, pension gaps, and budget shortfalls have pushed local governments to find new ways to collect cash without calling it a tax. For retirees and working families, it's suffocating. They budget for mortgage payments, for insurance, for groceries, but not for endless new community fees that appear out of nowhere. A few hundred here, a few hundred there, until suddenly, it's the difference between staying and selling. What makes these costs so dangerous is their invisibility. They don't make headlines. They don't get debated. They just quietly drain bank accounts, one invoice at a time. And by 2026, when many of these new charges are fully active, even stable homeowners may find themselves wondering, not if they can afford California, but how much longer they can afford to stay. Chapter 6. The aging infrastructure trap. California's beauty hides a secret most people don't want to think about. The state is getting old. Not the people, but the bones of the place itself. Roads, bridges, power lines, water systems, even the houses, were built decades ago, and many are now reaching the end of their lifespan. For years, repairs were postponed, budgets stretched, and upgrades ignored. Now the bill is finally due, and it's landing in the hands of homeowners. New regulations are being rolled out that require costly updates: seismic reinforcements, energy-efficient upgrades, solar panels, EV-ready wiring, water restrictions. The list keeps growing. It sounds responsible in theory, but the price tag can be brutal. A basic earthquake retrofit can run tens of thousands of dollars. Add solar requirements or green energy compliance, and a simple roof replacement can turn into a financial avalanche. For families already fighting rising taxes and insurance, these mandates feel impossible. Comply and drown in debt, or delay and risk fines, failed inspections, or canceled insurance coverage. Either way, homeowners lose. The irony is painful. These rules are meant to make communities safer and cleaner, yet they're driving out the very people who built those communities in the first place. By 2026, many Californians will be forced to make an impossible choice: upgrade, sell, or risk falling out of compliance altogether. And as more homes are abandoned or sold under pressure, one thing becomes clear: California isn't just rebuilding its infrastructure, it's quietly dismantling its middle class. Chapter 7: The Great Buyer Exodus. For decades, California's housing market ran on one simple rule: demand never dies. If you owned a home, it meant stability. If you sold one, it meant profit. But now, the line of buyers that once wrapped around the block is gone. Between 2020 and 2024, hundreds of thousands of residents left the state, chasing lower taxes, cheaper housing, and fewer headaches. Young professionals who once dreamed of a California address are settling in places like Texas, Arizona, and Florida instead. And investors? They've already moved their money, calling California too complicated to be worth it. What's left behind is a market that feels frozen in time. Homes sit for months. Price cuts stack up. Open houses are empty except for the echo of footsteps on tile floors. The shift is psychological as much as financial. For years, people believed California real estate was invincible, a guaranteed win no matter the price. But once that belief cracks, confidence collapses. And confidence is what holds every market together. Now, with fewer buyers, builders are hitting pause on new projects. Realtors are struggling to close deals. And cities are feeling the squeeze as property tax revenue starts to dry up. The scariest part? It feeds on itself. As more people leave, prices fall further. As prices fall, more owners panic and sell. It's not a dramatic crash. It's a slow unraveling that feels calm on the surface, but deadly underneath. California's housing boom was built on faith, the belief that growth would never stop. But when faith fades, even paradise starts to look temporary. Chapter 8: The 2026 Correction Window. Every financial system has a breaking point, and for California, that moment is drawing closer. Economists call it a correction window, but what's coming feels less like a correction and more like a reckoning. Over the next year, multiple forces are set to collide: rising property taxes, disappearing insurance coverage, expiring mortgage rates, and a shrinking pool of buyers. Each one alone would hurt. Together, they form a perfect storm. By late 2025 through mid-2026, analysts predict thousands of homeowners will hit their limit. They won't sell because they want to. They'll sell because they have to. It's the point where emotion gives way to math. During the pandemic, people stretched their budgets to chase low interest rates and inflated prices. Now, those same homes are losing value while costs keep rising. The equity that once made homeowners feel rich is quietly evaporating, replaced by debt, fatigue, and fear. Banks already see it coming. They're tightening loans, preparing for a wave of delinquencies. Investors are holding back, waiting for the drop. Even the market itself feels like it's holding its breath. And while this won't be a crash like 2008, it may be something worse, slower, quieter, harder to escape. Instead of a single collapse, it's a series of small, personal ones. Families downsizing, selling early, or walking away from homes they thought they'd never lose. The California dream isn't dying overnight. It's fading, one payment, one policy, one tax bill at a time. By 2026, the question won't be, is the market crashing? It'll be, who's left to buy what's left behind? California has always stood for opportunity, the golden promise that if you worked hard enough, you could make it. But today, that promise feels fragile. This isn't just a housing story, it's about trust. The trust people placed in a system that said home ownership meant safety. Now, that safety net is breaking. One bill, one policy, one payment at a time. By 2026, millions could be forced to sell homes they once believed would secure their future. And what's happening here won't stay here. It's a preview of what the rest of the country might face next. So the real question isn't if California's dream is ending, it's how long until it reaches you. If you want to stay ahead of what's coming and see the full picture unfold, make sure you're here for it. Hit subscribe, stay informed, and don't look away, because the story isn't over yet.